Revised Madani Budget 2023 focused on supporting sustainable growth for businesses and financial aids to our rakyat B40 and M40. Now this video serves to provide a comprehensive update on the budget proposals announced by our Prime Minister's budget speech and the announcement on tax appendixes and Finance Bill 2023. My teammates will update you on 10 topics in regards to Budget 2023. So stay tuned, and if you need any more information, do contact us.
Hi everyone, I'm Gayatri here. Today, I'm going to give you some of the budget updates. Let's talk about changes on individual tax first. Number 1, income tax rate. In dealing with higher cost of living and to increase disposable income among the middle classes, it is proposed that individual resident income tax rate be reduced by 2 percentage points for chargeable income band between 35,000 to 100,000, while increasing the income tax rate for those above this chargeable income tax band. You can refer to this summary for the chargeable income tax band. Number 2, medical treatment relief. At present, medical treatment up to 8,000 is provided for serious illness, fertility treatment up to 8,000, and vaccination and full medical checkup up to 1,000. It was initially proposed in October Budget 2023 that scope of tax relief be expanded to include dental treatment, but was later removed in the revised Budget 2023 by the new unity government. In the revised Madani Budget 2023, it was proposed that the maximum relief amount be increased to 10,000. With effect from year of assessment 2023, the scope of the medical treatment is expanded to include assessment in respect of diagnosis, early intervention program or rehabilitation treatment for autism, attention deficit hyperactivity disorder, also known as ADHD, global development delay (GDD), intellectual disability, Down syndrome, and specific learning disabilities. The relief is up to a maximum of 4,000 in respect of taxpayer's child who is aged 18 and below. Number 3, life insurance and self-EPF contribution. To encourage voluntary contribution to increase savings in preparation for old age, it is proposed that the life insurance premium relief of 3,000 be expanded and include voluntary contribution for private sections. Number 4, annual savings in the National Education Savings Scheme (SSPN). It was initially announced in the Finance Bill 2023 that the SSPN relief of 8,000 no longer granted any extension. However, on 29 March 2023, Prime Minister announced that SSPN relief be extended to 2024. We foresee the Finance Act will take into account the proposed change. Number 5, tax installments for self-employed person, which also known as CP500. Effective year of assessment 2023, taxpayer can now revise his or her income tax estimate twice during the basis year. First revision, which is the original revision, also known as CP502, by 30 June, while the second revision by 31st October. Number 6, child care relief. Childcare relief, which is granted to parents with child age 6 and below, will be extended until year of assessment 2024. Eligible deduction includes childcare fees paid to childcare centers or kindergarten. Last but not least, foreign source income. Foreign source income, which was supposed to be taxable in Malaysia effective 2022, has been postponed until 2026. All kinds of income other than partnership incomes by an individual, in which the income derived from foreign sources and remitted back to Malaysia, is exempted until 2026. That's all the updates from me. Let me get my other colleague to explain more on the budget updates. Bye.
Hello, let's talk about corporate tax. Number 1, income tax rate. Effective year assessment 2023, the income tax rate for micro, small and medium enterprises (MSME) on chargeable income for the first 150,000 ringgit will be reduced by 2%, meaning to say all these MSME can enjoy effective tax saving up to 3,000 ringgit. MSME here referring to companies with paid-up capital not more than 2.5 million and limited liability partnership with total contribution not more than 2.5 million and their gross business income not more than 50 million ringgit. But out of our surprise, it comes with a condition. The reduction of tax rate is no longer applicable to company and limited liability partnership which has more than 20% foreign owned, regardless directly or indirectly. In short, if the company and limited liability partnership is foreign owned more than 20%, it no longer enjoy preferential rate under MSME, meaning to say the chargeable income will tax at 24%. This will take effective from year of assessment 2024. Number 2, tax deduction on listing fee. Are you interested to get your company listed? Well, there is a tax deduction up to 1.5 million be granted to technology-based company for their listing into ACE and lead market. The expenses that are eligible for tax deduction includes fee for authority, professional fees, underwriting, placement, and brokerage fee. Technology-based company who wish to list in the Bursa main board can also enjoy this tax deduction, and this tax deduction has been extended to year of assessment 2025. Number 3, tax deduction on renting electric vehicles. Present, companies renting non-commercial motor vehicle can only claim a deduction up to 50,000 or 100,000 ringgit, similar to the maximum qualifying plant expenditure under capital allowance rules. To promote greener Malaysia, it is proposed that the deduction increase up to 300,000 ringgit only for rental of non-commercial electric vehicle. This is for year of assessment 2023 to 2025. Number 4, definition of plant. With effective year of assessment 2021, the definition of plant under Schedule 3 of Income Tax Act has been amended to include intangible asset. This is consequent to High Court appeal case on CIMB Bank Berhad versus KPHDN. The amendment took all the businesses by surprise, as software, for example, is one of the intangible assets. Although IRBM clarified that definition of software has been covered under the Gazette Order, the definition is still very ambiguous. In response to this, Finance Bill 2023 proposed to exclude intangible assets and include an exclusion provision which the minister can prescribe the negative list. We believe the negative list will be gazetted in the near future. That's all for the corporate tax updates. Thank you and see you next year. Bye!
Hi everyone, I will update you on withholding tax. Number 1, withholding tax for agents, dealer and distributor. At present, 2% of withholding tax shall be deducted and remitted to the Inland Revenue Board within 30 days after paying or crediting the payment to a resident, individual agent, dealer or distributor. A special extension was given to the taxpayer to remit the payment not later than the last day of the following calendar months. This special extension has been taken into account in Finance Bill 2023. You can refer to this illustration. Number 2, application for relief. If the withholding tax payment was not made by the corporate tax filing statutory date 9, the expenses will not be granted a tax deduction. Only when the payment has been made, the taxpayer can submit for an application for a relief. This is also in line with the latest of Finance Bill 2023 updates. Number 3, due date for small value withholding tax. Special due date concession will be given to small value withholding tax payment. Small value withholding tax payment herein referred to withholding tax payment which does not exceed 500 per transaction, and a small amount payment transaction occur more than once in a particular period of 6 months. The allowed payment period are as follows: on or before 30th of June for the payment transaction, between 1st of December of the previous year to the 31st May of the current year, and on or before 31st of December for payment transaction between 1st of June and 30th of November of the current year. Next, my colleague will share more about the budget updates. So, bye!
Let me update on RPGT, which is Real Property Gain Tax. There are only 2 updates on RPGT. Number 1, transfer of property due to divorce case under court order. At present, the treatment no gain, no loss, which refers to the transferor's disposable price for a real property is deemed to be equal to his or her acquisition price is available for a transfer of real property between spouses where the transferor is a Malaysian citizen. Divorce cases under court order will subject to real property gain tax as per Schedule 5 of the Real Property Gain Tax Act 1976, which normal RPGT rate will apply. It is proposed that the no gain no loss treatment is extended to transfers of real property between former spouses pursuant to an order of any court in consequence of the dissolution or annulment of their marriage. Number 2, transfer of chargeable asset to company by an individual. At present, transferring real property owned by an individual into a company that is controlled by the individual for a consideration that consists of at least 75% of shares in that company, the individual is deemed to have transferred the real property at a no gain, no loss. It is proposed that the no gain, no loss treatment is only applicable to company incorporated in Malaysia. That's all the updates from me regarding RPGT. Now let me get my colleague to give you all more updates on budget. Bye.
So let's continue with the next budget update, which is stamp duty. First update is number 1, transfer between parents and children from 50% stamp duty exemption to 100% exemption for first 1 million of property value and 50% exemption for subsequent amount. And then next one is transfer between grandparent and grandchildren. From normal stamp duty rate, the same rate as transfer between parents and children, which is 100% exemption for a first 1 million of property value and 50% exemption for subsequent amount. Number 2, stamp duty for restructuring, rescheduling loan or financing agreement. At present, 100% stamp duty exemption is provided on restructuring or rescheduling loan or financing agreement between borrowers and financial institutions. The exemption will be extended for another 2 years for agreements executed from 1 January 2023 to 31st December 2034. Number 3, stamp. This proposed that effective 1 January 2024, full implementation on stamping and stamp duty payments using stamp and the use of cheque will be abolished. Lastly, number 4, first home buyers. In order to encourage more Malaysian citizens to purchase first residential home, government continue granting a full stamp duty exemption on instrument of transfer and loan agreement for property valued not exceeding 500,000 and 75% stamp duty exemption for property valued more than 500,000 to 1 million. This exemption will be effective for sales and purchase agreement up to 31st December 2023. Thank you, that's all from me. My colleague will continue on the next budget update. Bye-bye!
Now, let me update you all on the sales tax. There are only 2 updates regarding sales tax. Number 1, tax incentive on electric vehicle industry. It is proposed that full excise duty exemption and sales tax exemption on completely knocked down CKD electric vehicle will be extended to 31st December 2027 and full import duty and excise duty exemption on imported completely built up CBU electric vehicle will be extended to 31st December 2025. Number 2, sales tax on low value goods worth RM500 and below, which was supposed to take effect from 1st April 2023, has been postponed until further notice. That's all the update from me for sales tax. Let me get my colleague to further give you all the updates.
Hi everyone, today I will give you some updates on Budget 2023 regarding the e-invoicing part. So, what is e-invoicing? E-invoicing is not something new in the world and it has already introduced in many countries such as Chile, Hungary, Japan, or even South Korea. And our government indicated that it will be start implementing this e-invoicing system in phases starting from 2023. So e-invoicing is an exchange of electronic invoices in a structured data format between the buyer and the supplier, and which allow automatic and electronic processing. So with all the data speaking the same language, this data will store in a network that called as paper. So in this paper, there is a model that's called as 4-corner model. So the corner one will be the preparation part. The supplier will use their business software to prepare an invoice. And the second corner will be the access point will send an invoice. The seller's paper certified access point will send an invoice. And for the corner 3, will be the access point will receive the invoice. So the buyer's paper certified access point will receive the invoice. And for the last corner, and it is the 4th corner as well, it will be the process part. So why shall we use e-invoicing? The Malaysian government choose to implement e-invoicing is because of it is able to help the Malaysian tax authorities to deal with the tax leakages, black economy, or even artificial invoices. It also brings a greater transparency to the tax authorities. And what about for the data production part? The only concern for the e-invoicing system is how the company data will be stored and who has the authorization to access them, and what are the security measures in place if there is any breach of security, and can the government handle the huge flow of amount of data? Are we really ready for it? So the fourth part will be the implementation part. Just now we have already mentioned our government will start implementing in phases starting from this year 2023. The government has started the preparation of the infrastructure of the e-invoicing, and the plans to launch a pilot project on the selected companies. So in the next year 2024, the government will make it mandatory to all the business which achieve 100 million annual sales threshold, and in 2025 mandatory to 50 million sales threshold, and in 2026 25 million sales threshold, and in 2027 it is mandatory to all the businesses to use the e-invoicing system. Do you think it is rational for the government to implement the e-invoicing system? So that's all the updates from me. My colleague will continue on the next budget updates. I will see you in the next video. Thank you.
Well, today I'm going to talk about transfer pricing. So if you are asking yourself to TP or not to TP, well, that is something you have to be wary about, because in the year 2021, the tax authority has enacted new laws into the Income Tax Act, whereby taxpayers which are required to prepare the TP documentation but have not done so will be exposed to penalties. Moving forward, there's two penalties that taxpayers have to be aware of. The first one will be failure for not producing the TP documentation upon which requested by the tax authority will carry a penalty of 20,000 to 100,000. Unlike prior to year 2021, there are no penalties for company if they fail to prepare the TP documentation. Now, the second part of the penalty is the 5% surcharge. In the event of an audit, the tax authority were to do any transfer pricing adjustment. Any adjustment, whether it's to increase the revenue or to reduce the expenses, you will be subjected to a 5% surcharge. Now, the second update, and this is something that I need to applaud the IRB, is the flowchart that the tax authority has prepared for taxpayer to determine whether they need to prepare a TP documentation or not, and if they are supposed to prepare a TP documentation, what sort of TP documentation they need to prepare. Is it a full TP documentation or simplified TP documentation? If you are required to prepare a TP documentation, there are also things that is mentioned in the website what needs to be included into the TP documentation itself. And lastly will be the company's income tax return. Now, unlike prior years, they're asking things like whether you have prepared a TP documentation. But now it's more than that. They are asking, do you need to prepare a TP documentation? And if you are required to prepare a TP documentation, what sort of function that you perform? For example, if you're a manufacturing company, what sort of manufacturer are you? Are you a toll manufacturer, or are you a contract manufacturer, or a full-fledged manufacturer? You have yet to prepare your TP documentation. This can be a challenge because generally the TP documentation will actually list out what sort of a manufacturer you are, and only by then having the TP documentation can you actually complete the information required in the Form C. Okay? Now, thank you very much. I'll pass it on to my next colleague to update you the updates for Budget 2023. Cheers.
Hi everyone, I'm Annie here. So now let's talk about updates for employers. Number 1, expansion of scope for human resource development. Effective 2022, all employers with 10 Malaysian employees and above are required to contribute 1% to the Human Resource Development Corporation. This must be submitted by 15th of the subsequent month. The scope no longer limited to specific industries, but all industries including small medium enterprises. Number 2, Employment Act Amendment 2022. In order to increase and improve the protection and welfare of the employees and ensure labour law provisions are in accordance with the international labour standards, the Employment Act Amendment 2022 takes effect from 1st January 2023. This is applicable to all private sector employees in Peninsular Malaysia, including Federal Territory of Labuan. Some of the primary amendments include: Number 1. Maximum working hours reduced from 48 hours to 45 hours per week. Number 2. Maternity leave increased from 60 days to 98 days. Number 3. New 7 days paternity leave. Number 4. Separation of sick leave and hospitalization leave. Number 5. Calculation of wages formula for incomplete months work. And the last one, flexible work arrangement. And the next update is Part F of EA form. There is a new update on Part F disclosure which will also affect your Form CP&D disclosure when it comes to submission of Form E this year. Effective Form E for year 2022, the amount received by the employees for the purpose on obtaining a smartphone, tablet, or personal computer can be exempted up to 5,000 ringgit Malaysia. And the last update is regarding Employment Recalibration Program. Recalibration Program is a special program to regularize illegal immigrants or pendatang asing tanpa izin parti in Malaysia. Therefore, the foreign workers could be legally employed by an eligible employer but subject to strict conditions set by the government through the Jabatan Immigration Malaysia, JIM, and Kementerian Dalam Negeri, KDN. Peninsula Malaysia's employer can start applying to recruit foreign workers through this program from 27 January 2023 until 31st December 2023. So that's all for the updates for employers. And now, my colleague will continue with the rest of the budget updates. Thank you.
Let's talk about other initiatives. 1. Inland Revenue Board of Malaysia and Royal Malaysian Customs Department will reintroduce Special Voluntary Disclosure Program 2.0. The first SVDP in short in 2018 and 2019 is only for Inland Revenue Board, but this case is both Inland Revenue Board and Royal Customs Malaysia Department. 100% penalty waiver will be granted for voluntary disclosure from 1st June 2023 to 31st May 2024. Taxpayers who are currently under audit or investigation sadly are not eligible to participate in this program. If there is more information, I will update you accordingly. Second, capital gains tax. One of the most anticipated topic on all businesses, I would say. Government will study the introduction of capital gains tax, focuses on gains from disposal of unquoted shares. This is effective 2024. However, we do not have the details yet. Details will only be unveiled after carry out consultation with relevant parties. So this focuses on unquoted shares. So if this is under Bursa ACE market, I don't think it will be affected. It's only for those unquoted shares, or I can say in short, unlisted shares. Number 3, a new tax will be introduced on luxury goods of certain type of value. For instance, luxury watches, fashionable items, or maybe a very expensive motor vehicle. So tentative date for the details to be announced is June 2023. Since Malaysia has no references, so I did some research and came across a reference under the balancemoney.com. It was referenced to the luxury tax that was being imposed back in United States in 1991. Congress enacted a 10% federal luxury tax in 1991, and it was imposed on the first sales price of a number of items, such as furs and jewelries, vehicles, boats and aircraft. Of course, with a specific price tax. So critics of the luxury tax argued that it has a very damaging effect on the market for luxury goods. So put it shortly is that when this luxury tax was being introduced, at the end of the day, the consumer changed their behavior. Instead of buying more expensive goods, they buy multiple smaller value or smaller cheaper goods. So it's basically just changed the behavior of how they shop. So the federal government figured out that this 10% was supposed to raise 9 billion in revenue, but in reality, it brought in very small amount of tax dollars, and it was eliminated just a couple of years later. From that lesson, what we learned was the consumer just changed their habits, and at the end of the day, they bought, for example, they bought an old one instead of a new one, and that really impacted the whole industry in early 1990s as a result. So I hope Malaysia is not going on the same direction. I hope this can sustain for a longer period. But as far as we know from the whole world, GST, Goods and Services Tax, and VAT, Value Added Tax, is still the best way forward. And I hope today's video on all my fellow teammates update is valuable and benefited all of you. So thank you very much for giving us the opportunity to serve, and I hope to see you again. Thanks.